Right now, everyone's been talking about the Fed's going to cut the rates. The Fed's going to cut the rates. And, from the market standpoint, we've seen a little bit of a lull as far as buyer activity.
Yeah.
And what we hear out there is, well, we're waiting for the Fed to cut the rates. Well, the Fed rate cut may not officially happen, but it's already reflected in the mortgage rates now.
Right.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
If you go back, and what John was saying, I'll give him credit. When you go back to the Fed meeting in Wyoming that they had, from that point to now, the bond is down 25 basis points.
There you go.
So now there's the 25 basis points cut. The question is going to be what happens with some of the inflation data tomorrow.
Right.
And then how bad do they look? Is this a quarter or is this a half point cut?
Yeah.
So we don't know that yet, and that'll come about. But if you're waiting to buy, stop waiting. This is, the cut's already in the mortgage rates.
Yep. Yeah.
Shop around, talk to a couple of lenders, get an idea where the rates are, and go with one that you think is going to get the job done more importantly than the rate.
Yeah. I mean, historically, we've always talked about the idea that the Fed rate has no direct influence on mortgages, although of late it has, because that's what it's just. It's really a matter of perception,
right,
than anything else. But the most important fact that I think that you brought up, and the thing that John talks about, is the idea that lenders are thinking long term. They're anticipating it right now. They weren't waiting for it to happen.
Exactly.
So they made their move already. So if the rate were to drop, say a quarter point or something of that nature, you're not going to see mortgages move that much because they've already done it.
You might see them go up.
There's a possibility.
There's a possibility you see a little uptick if they cut the rates a quarter and the data is bad.
Right.
You might see a little uptick. We've seen it in the past before because, and everyone says, well, why are mortgage rates up when they cut the rates? Well, the rate cut was already reflected into the mortgage rates prior to the cut.
They're almost always a time ahead. They're always thinking about the next cut or increase or flat or whatever. Lenders are always one ahead of the Fed and anticipating what's happening with the Fed.
Exactly.
I think it's important for people to understand that in light of the fact that there are those out there saying, gee, I'm waiting until the Fed drops their rate. There are people out there. See, you know what? That's just silly, first of all. A quarter point, look, it's going to save you money. I understand that. But 6 months from now, you might be able to refi at a point lower. We don't know. We just don't know what's going to happen.
It may not drop. It might be at its lowest point right now, and you're going to wait till they cut the rates and they go back up. Then what's going to happen?
And prices are not moving. They're not going down. They haven't gone down. Even though inventory is going up, prices are not going down. And part of that, we've talked about this before, part of that is because sellers are supporting the price with everything they can. They're throwing in concessions. They're doing everything to keep the price where they want it to be. But ultimately, we might see the prices adjust a little bit, but they're not going to go. They're not going to. There's nothing out there that says that prices are going to fall significantly. There's nothing in the ether right now that says that that's going to happen.
There's outside factors that could come in, but the job report wasn't great last week. But unemployment's still 4.3%. It's not like it's an astronomical high number.
No, we're not talking 10% unemployment.
Right.
However, it's interesting. When John came and talked, they talk about the idea that the more unemployment goes up, the more likely it is for the Fed to drop the rate. Okay, I kind of get that because they want to support the economy. They want to prop up the economy a little bit. I understand that. But it's not going to do anybody any good if they don't have a job. So, I mean, if you're one of those people who's part of that stat, you're like, yeah, great. You dropped the rates, but now I don't have any work, so I can't buy a house. So, it's kind of a contrary thing. It's kind of a catch-22.
Right. For sure.
In that sense. Although again, you and I talk about this all the time. If you can find a house that you can afford and it makes you happy, buy it.
Absolutely.
Just stop thinking about rates and everything else. Just do. I mean, and Harvey, you're a realtor. You're just saying, no. I'm a homeowner. And I know the value of home ownership, and I don't want anybody out there to think that it's anything less than that. And yes, I would love to get your business. I like doing business. I like to make money. There's nothing wrong with that. But here, I'm on the show to teach. I'm not on the show necessarily to get your business, but I'm here to teach.